2025 was wild. We had tariffs that absolutely shook the stock market and made us think that we were going into the next Great Depression. Then the stock market took off. We had Bitcoin that reached over $100,000 and hit an all-time high, and then it too fell off a cliff. We had the worst job market ever. We had the longest government shutdown, and through it all, we still put out 150 videos walking you through what was going on and the best things to do throughout the entire year. But now that the year is almost over, what exactly did we learn? There were mistakes that were made, both by me and you and everybody in between. And to make sure that you don't repeat those mistakes, you have to go back and study those notes. I have some of those notes right here. That is what we're going to do in today's video. What were the biggest mistakes that we made? How can we go back and correct them to prevent that in 2026? Let's go ahead and break it down. What I did was go back and look at some of my stock lists throughout the entire year. I went back and looked at the videos and said, what were the things we got right? What were the things we got wrong? And what can we somewhat expect for 2026? Because if you plan on being a better investor and someone who's trying to improve their finances in general, or you can just say just to be a better person, you want to try and reduce your mistakes as much as you possibly can. Now, you're not going to be perfect. No one is, but there are some absolute lessons that we can learn. So I'm going to start off with the negatives, the things that we did not get right, and then the things that we got correct. And we did get a lot of things correct this year. And I'm going to save the biggest mistake. I'm going to save that one for last. The first mistake, and I am not one to hide mistakes. I talk about them here. I try to be as transparent as possible. But the first one is stagflation. Now, I was in an article for the Wall Street Journal talking about the possibility of stagflation. Now, what I didn't say is, this is going to cause stagflation. It is going to happen in 2025 on this day. Now, I am not the type of person who is going to go out and do that. But what I did say is that there is a risk of stagflation if we have high tariffs and if the Fed starts to cut rates. Now, we haven't had stagflation necessarily, or at least not officially, but we do still have some inflation and we did have some tariffs. Now, the difference between what happened in my, quote unquote prediction is that initially when we had those tariffs, the tariffs were 100%, right, or 200%, or like crazy tariffs, and they ended up being much smaller than that. Now, currently, the Fed is cutting rates. I would argue they're cutting rates too much, but we'll see. Now, the difference here is the economy is still growing to an extent, but there's also, a rough labor market, and we also don't have the cleanest data out there. So we'll see where that stagflation, thought and claim is going to go. So we'll see, where that thought around stagflation, the risk rather of stagflation is going to go. But it didn't happen this year. I didn't want it to happen anyway, right? But again, that was something that I was concerned about. But it hasn't happened in 2025, and I would argue that that is a good thing. Next thing I was wrong about, Tesla. Now, I am openly, I would say, wrong about Tesla often. Call it what it is, okay? Tesla is, and I've said this before, it is a difficult stock to nail down for a bunch of different reasons. So far, at the time I'm doing this video, it's up 46% in the last 6 months, and up about 11% over the last year. Now, in 2025, a lot of crazy stuff happened with Tesla and with Elon Musk. This is the same guy who took a chainsaw and did crazy stuff on stage with it. He was running Doge. Doge fell apart. He was feuding with the president of the United States. He did a whole salute in front of everybody. It does not make sense that he got $1 trillion pay package and all of that's going to be paid out over several years, assuming he even hits all of these numbers. Like, all of these things happen within the calendar year. That does not make sense. And on paper, it does not make sense. And let's also not forget that international sales in places like Germany and China and all these other locations fell by double digits. So sales were falling overseas. People, your brand here in the US was falling apart, and you were heading up Doge, which was wildly unpopular and dissolved here in the United States. All of these things were happening, and you still got $1 trillion pay package, and the stock was still up 46% in the last 6 months, and the stock was positive anyway after being down so much as it was earlier this year. I think it was down close to 50% at some point this year. That doesn't make sense. Now, because we have experience on this channel talking about Tesla, I said back then that it wouldn't surprise me that the stock will recover at some point. I would not have expected that it recovered this quickly, because I feel like Elon himself is a meme. So the stock does what it does. Wrong about that one, if you want to call it that. But yeah, that's not something I would expect. But I would call this next one perhaps my biggest mistake. This one was wild, but we did have a safeguard here. That is Netflix. Netflix has finally betrayed me, and there is a solution here. Netflix is down 29% in just the last 6 months, and only up 3% in the last year. Netflix, what have you done to me? Netflix has betrayed me. Me of all people. I have been the one champion Netflix for well over a year. I was the one who came out last July talking about how great Netflix could be, and it was. I talked about how it was an election-proof stock. I like to put that in air quotes. Last year, around election season, then when tariffs started to hit, I said it was tariff-proof, and for a while it was. Then all of a sudden, they somehow were able to tariff a streaming service and movies. Now, the first time that was threatened, didn't happen. The second time, it absolutely started to impact the stock. Now, the part that I do think did start to hurt the stock was its acquisition of Paramount. Usually when a company does start to make a major acquisition, because it is a drain on cash usually, or they had to take on a lot of debt, that does start to tank the stock in the short term. That is likely why Netflix is falling apart right now. In either case, this right here is why I have that 6-month rule, because if you go back at the 6-month mark, if you're doing December to June, you could have looked at June and said, all right, look, this is my opportunity to take my gains and take it off the table, because it was starting to slow down at that point, and you already got one threat of tariff. So that was the opportunity to take your money off the table. Also, if you are investing the first time that I brought up Netflix, you are still up. So now would still be the opportunity to take your money off the table while you are still up. So it ain't all doom and gloom, but I still would have thought that Netflix would have ended the year positive, and technically over the entire year it still is. I mean, up 3%. I mean, cool, right? But if you invested in last summer, then you're still fine. But this is not the best ending to what I thought was a great movie. Clearly it is not, and that is not the best way that I thought Netflix would go. But a better way to go is my free investing guide on how you can start investing in 20 minutes. There's so many people trying to figure out what to do, especially next year, but trying to learn the entire investing process is very difficult. So what I have done is put together a free PDF on A to B, how to start your first investing account, how to go through that entire process. It takes about 20 minutes to do, 100% free. buildingbread.com/20 is where you can get that guide. Now, what about the wins? All right, I like to end up on a good note, unlike Netflix. What were the things that went well? Now, this list is longer, which is good. We were right on the money for many of the things that we had talked about in 2025. The job slowdown, the economic slowdown that I did warn us about, I'd argue we're a bit too right on the nose about that one. I was concerned about how tariffs, and AI for that matter, were going to shake up the economy, and we're going to shake up the job market. Unfortunately, it shook up my own personal job market. And I had been talking about very, very early this year about, hey, stay ready so you ain't got to get ready. That was something I consistently said before I was personally laid off. So it was accurate, right? And we saw that this year it was very difficult for many people to get back into the workforce, and it was announced that this is one of the worst job markets in the past 22 years. So it's not just a personal experience, it is a nationwide experience for many people. So that was one that did happen. Tariffs are scaring some companies into not hiring, and also for new graduates, especially those in the computer science area, which is odd because we told so many kids that you should learn to code to get a good job, that those jobs are for the most part eliminated because AI is taking many of those entry-level positions that you would graduate college and get into. So now those are gone and making it harder for those new kids to kind of get into those career fields and move up into the workforce to begin with. So that economic slowdown, that thought, that sentiment, that prediction, I don't really like to use the word prediction, but that one was one that was absolutely on the money in 2025. This next one is something I say all the time, so call it what you want. I said stay invested. There was somebody who called me a fool and called me arrogant, and I ain't forgot. All right, when the stock market was falling apart during the whole tariff liberation day thing, I said that we had been back from worse. I said that the COVID drop in 2020 was bad. It was worse than what we were seeing during the tariff drop, and that it was okay to stay invested. That long-term investing in history showed us that we could come back from this. Look at you now. Look at you now. Okay, I also said it was more American-centric, and that's a fair criticism. That's 100% fair. But long-term investing has proven to be a solid thing, regardless if it's U.S. or not, in most cases. I also said, we were right about this, that international stocks were a great place to pay attention to in 2025. That was absolutely true. Though the U.S. stock market at the time of doing this recording is up double digits, outside of the U.S. was even better. Places like South Korea, I've mentioned this before, up almost 70%. Germany was doing quite well, and other sectors in Europe, the entire European index fund. I apologize. I got I was going to say the acronym, the ticker symbol wrong. I think it was Sneaky Cats that corrected me in the comments. I do appreciate that. But sometimes I flip letters, y'all. But in either case, that was another mistake. We want to call that one out. And that's the previous list. But in either case, Europe did well. South Korea did well. And the US was good, but there were other markets that did quite a bit better. So pay attention to those. And again, that was one that we did call out, I would say, halfway throughout the year. There were also several stocks and sectors that we did call out that did well. I talked a lot about eBay and why they could continue to do well in 2025. eBay is up 17% in the last 6 months and up 37% over last year at the time we're doing this recording. Because prices were going up, because of tariffs, people may go more towards used items. That's a place, right, that people could go for savings. eBay has proven to do that. Will that happen in 2026, or will it go the way that Netflix has betrayed me after a year? We'll see. We'll see about that. Hamwell, I talked a lot about defensive companies. That was one of them. Hamwell ended up at the end of the year, though the year is not over with, we have a few more days, up 13% in the last 6 months, up 88% over last year. That was one that held, that I talked about for a complete calendar year at this point. And then financial stocks. We started talking a lot about financial stocks at the top of the year. Morgan Stanley is one of those companies that was up 28% in the last 6 months and up 42% over last year. So the financial sector did well most of the entire year. And I've said this, and we've learned this with Netflix, and perhaps we're going to learn this here in 2026. And learning this with Bitcoin, people are seeing this now, is what worked in 2025 might not work in 2026. You are going to have to figure out how to adjust. Now, the difference here, and is one that I have had to adjust and learn, is that just because it hits January 1 or January 2 when the stock market is actually open, that doesn't mean the rules change right then immediately. And I think that's the lesson I really had to learn with Netflix, which is also why I had that halftime point in the year to make those changes to my own portfolio. But that's the thing. We need to figure out what the rules are going to be for 2026. What things are changing for 2026. Right now, analysts are saying that they think there's going to be a rally in 2026. Now, interestingly enough, when we did a video at the top of last year, they thought there was going to be a recession in 2025, and that didn't exactly happen. I'm saying that because The government shutdown did kind of throw off some data. They did fire someone at the Bureau of Labor Statistics. So do we really know that or not? Who's to say? I know how people feel, but feelings are not also facts. So who's to say? What I can say though is yes, analysts can absolutely be wrong, and just because everybody feels like they're like the stock market is fine and we're over the worst of it doesn't mean that something unpredictable can't happen. What I do need us to all know is the rules can absolutely change and you need to be on your toes. Now that we have had our lessons and taken our notes from 2025, what are the things we need to adjust? What do we know and what do we expect next year? It will be a midterm year as well. Is that something that needs to be prepared for? What is the Fed going to do? These are the things that are going to be on my mind as I start to change my portfolio and perhaps put on a workshop or something if that's something that we are interested in. So these are things you need to think about for 2026. If you're interested in learning more about investing and what to get ready for 2026, you want to check out these videos right here.